Welcome to first and only SaaS News Digest featured on LinkedIn, covering news, events, and updates that are happening in the SaaS community worldwide. Our first digest today offers an update on the Snowflake, the cloud-based data warehouse solution. Third quarter results show good momentum after going public in September. According to experts, this has led to some very steep valuations. Snowflake claims they do not have a SaaS business model, or rather, they say that 93% of their revenue is based on actual consumption of services. Snowflake's first commercial product hit the market in 2014, and since then, they have gained a third of the Fortune 500 as clients. That may be part of the reason they were able to sell 28 million shares in September, and prominent investors like Salesforce and Berkshire bought with a quarter of $1 billion worth of shares. And those shares started at $120, reached a high of $300, and settled around $225, all in the first day. Shares are currently trading at $323, putting their valuation at $91 billion. And with $5 billion in net cash, the resulting operating asset valuation sits at around $86 billion. And that is a 53 times annualized revenue, but the company continued to report losses. The reported losses in the third quarter even surpassed their reported revenue gains. But their cash balance and prospects are large enough to handle steep losses for now. They're experiencing solid commercial traction, which is not necessarily related to COVID-19. And the total addressable market is huge, even with the competitors on the field. Some experts believe that Snowflake's bottom line performance will remain strong. Next, we're going to dive into the SaaS and the venture capital ecosystem. SaaS has proven itself immune to COVID-19 and essential in our daily lives. In 2009, SaaS accounted for only 2% of the software market, but in 2020 we saw SaaS jump to the new heights. It reached 23% of the overall software market with $100 billion in revenue, and experts are saying this upward trajectory will continue into 2021. The pandemic has highlighted a great need for innovation in biotech sector, and moving forward, we will likely to see capital providers on the hunt for companies that offer biotech and life science SaaS solutions. We're seeing a huge boost in the late-stage venture capital in those sectors, and according to the National Venture Capital Association, pharmaceutical and biotech investing is going to shatter deal value records. This will support strong exits that will push increased valuations. 2021 will bring more investments to biotech and pharmaceuticals with more dollars allocated to debt. We're also seeing that the venture debt returns have had the lowest volatility of all direct lending this year. A recent survey showed that more than 80% of entrepreneurs were becoming more comfortable with venture debt. For many, venture debt is a great alternative to venture equity, and it allows entrepreneurs to maintain control of the direction and mission of their business. 2021 will see entrepreneurs tapping into venture debt and possibly driving one of the best years for venture debt financing. Companies will be using venture debt for additional runway they need to plan or pivot. Then they will hit the venture equity market when they have reached optimal valuation. Despite many obvious challenges, the venture capital ecosystem performed well in 2020 and is set to do the same in 2021. Our final digest today discusses some important points in relation to SaaS security. SaaS solutions has been growing in popularity, and pandemic has only accelerated this trend. But what is being not discussed enough is the effect of the SaaS solutions can have on a company's security. And this year has dramatically changed the way employees are interacting with business applications. This is something that IT departments worldwide know very well. And it's also the reason that the companies need to have more conversations and education when it comes to security. It is essential to make sure that SaaS vendors are keeping company data secure. It is a serious challenge as employees use SaaS solutions from network outside of their office. And some experts recommend looking for SaaS providers that offer multiple configurational options. And this should include setting and identifying federations as well as the different organizational models. Using multiple SaaS vendors and an increased number of user endpoints is not even the entire picture. We're also seeing advances in hacking techniques that need to be considered. All of this leads to the reality that companies in 2021 will need to implement more modern security architecture. And this will include cloud-based security and access management protection. For many, it will include partnerships with cloud access security brokers. Forward-thinking IT professionals will upgrade security architecture and evaluate vendors more effectively. And this will help their companies enjoy the benefits of SaaS solutions while better mitigating risks. I hope you enjoyed SaaS News Digest. The SaaS News Digest belongs to all of us and provides value to members of our community because of you. So please click on like or insightful button and share SaaS Digest on your LinkedIn page. And let's work together in developing this community and setting new SaaS global standards. My name is Artem Gasan. I'm the general partner at SaaS Growth Ventures. And my superpower is I fuel growth and revenue for SaaS companies. Thank you for watching, and I'll see you next time.